Hey there, everybody. Just want to really quick do a mic check, make sure everyone can hear me, and make sure you can see my screen. We're looking at the S&P on 2000 tick chart. Excellent. Good deal. Well, I want to welcome you all to today's webinar, or to tonight's webinar. We're going to be discussing, it's a little less formal than how I normally do webinars, because it's more going to be a Q&A, and it's going to be me teaching you a specific strategy for trading the indices during high volatility periods like we have here over past few months. But again, it's going to be a lot less formal, and I'll be doing a lot of answering questions, making sure everybody understands stuff. It was something I wanted to do just to teach everybody something, because we talk about this strategy in the trading room all the time, talking about the 1,000 tick or the 2,000 tick momentum trender strategy using the Trender Pro. So is tonight being recorded? Yes, it is being recorded, and the recording, I want to put it up on YouTube, I believe. So if you go to the Value Charts YouTube channel, you'll be able to access the recording later on. That'll be Value Chart or youtube.com/Value Charts. All right, so how is everybody doing tonight? Just really quick before we jump in, I always like to find out where everybody's from. So where's everybody coming in from today? Because we have a few hundred people in here tonight. Los Angeles, Austin, Texas, Ohio, New Jersey, Hawaii, Dallas, Indiana, Chicago, Florida, Maine, Dallas, Seattle, Georgia, Seattle, Denver, Calgary, Toronto, Virginia, Central Illinois, North Carolina, West Virginia, Washington State, New York. You guys are about to get the rain that we got, I think. North Detroit, Raleigh, Denver. Good deal. Yeah, we had a huge thunderstorm come through today. We had like 3 different tornado warnings. Well, welcome everybody. If you don't know who I am, my name is Thomas Wood. I'm the Director of Trading Operations at ValueCharts.com. I also run the Futures and Forex Trading Room. So if you ever come into the Futures and Forex Trading Room, you see me in there or hear me in there every day talking about different trading opportunities, different setups. Great job, by the way, for everybody in the trading room today that took the longs and the indices and took the shorts and bonds going into the afternoon, because they worked out really well. Indices ended up climbing. So without further ado, I'm in North Carolina, Mike. Without further ado, let's go ahead and get talking about the first thing that we're going to discuss, which is the S&P trading strategy and the strategy you use for higher volatility markets using the Trender Pro. Now, for those of you that don't know what the Momentum Trender Pro is, it's the indicator I have on this chart right now that's painting the price bars green, blue, and red. And the way this indicator works is if the price bar is green, it is bullish. If the price bar is blue, it is consolidation or reversal. And if it's red, it's bearish. Now, it's not looking at a traditional trend, because the way that we analyze a traditional trend is we look at higher highs and higher lows for uptrend, or lower highs and lower lows for downtrend. What this is looking at is a momentum trend, so a fast moving trend when the market is really ripping one way or the other. When the market kind of slows down a little bit, you'll see it pull back into this neutral area, which is the blue. While it's moving very quickly and has a fast moving momentum trend, you'll see it staying green or staying red. Okay, so within the context of an overall uptrend, for example, like we have here, we have higher highs, higher lows on our pivots all the way up. This stays in an uptrend all day or throughout that time period, though we have a couple different sections where the market pulls back into bearish. All right, so when we're looking at using the Trender Pro strategy, the way the strategy works is very simple. It's really easy. When we're using a couple different things as filters. First off, we're going to look at the MQ trend, which are these dots here, green dots and red dots. All right, the green dots are bullish trend, red dots are bearish trend. Now, a lot of people are going to say that looks like a parabolic. Is it a parabolic? No, it's not a parabolic. What the MQ trend does is it uses what's called chandelier logic for identifying the trend. So once price action closes above the dots, it's going to set a specific distance away, set a couple of standard deviations depending on your settings away from the price, and then it's going to move at a set pace higher, or it's going to move sideways, okay? And it will never accelerate, whereas a parabolic accelerates towards price action as price action gets further away. The MQ trend, it'll either move sideways or move up at a set pace, so it doesn't ever accelerate towards the price. And what that does, one of the advantages of using chandelier logic like that as opposed to a parabolic, is it allows markets to go up and then pull back like this, and then go back up and pull back and go back up and pull back down and go back up, and it'll keep you on the right side of the trend. So it gives you a little bit more room, a little more wiggle room within the context of the overall move, so it'll keep you in a trend longer. Now, this is important, especially when we're trading in a high volatility period of time like we have right now, because these retracements, these small retracements like this that don't look all that big, are actually, for example, this one here is a move from 1910 all the way back down to 1903. So you're talking about a 7-point retracement in the S&P E-mini. Same thing up here. You move from 29.5 all the way back down to 22.5. Okay, so another 7-point retracement. That's a pretty big move within the context of the overall uptrend. So it helps by filtering out a lot of those retracements and keeping you on the right side of the market. Now, the other thing that we do when we are trading the Trender Pro strategy is we're going to have directional bias. A lot of times we'll have directional bias, not always, but what I mean by directional bias is we'll go and we'll look at a larger time frame, okay, and we'll decide which direction we believe the market should be moving based on the larger time frame. So if you have a daily setup, for example, if you have a daily setup trigger and you're going to say, all right, I'm only looking to be bullish, take the bullish MQ trend trades or Trender Pro trades because I have a bullish directional bias. Or if you're bearish on the market for that day, you're going to say, I'm only going to be taking the short trades because I have a bearish directional bias in that market. And this is one of the big things that will help with keeping you out of getting chopped up. And what I mean by chopped up is going short and then reversing, going long, and then reversing, going short. So we're going to look at a couple things. We're going to look at what's our overall directional bias for that market, and then we're also going to look at the MQ trend dots. All right, MQ trend will confirm. So for example, look at today, and if you do not have, by the way, if you do not have a directional bias, then you're just going to rely on the MQ trend dots. All right, so if you're looking at the market and you go, you know what, I don't really know which direction it's going to be going today, then you're going to use MQ trend filter within the context of the Trender Pro. So the way that you're going to trade it is for the S&P, you'll buy when you change to green. Okay, you'll buy when you change to green, and you have a $160 stop. Okay, so $162.50, something like 10 ticks. All right, and what should happen is the market should start to move your direction very quickly. Now, you have a couple different options depending on your personal risk tolerance. All right, if you have a higher risk tolerance, or if you have if you don't mind having more risk on your trade, then you're going to have the $160 risk, and then you're going to stay in it even though the market changes back to blue. Okay, so you'll get long as soon as it changes to green. So for example, you'd be taking a long right here, and I know I'm cherry picking a setup that works, and I'll show you what it does when it doesn't work. You'll be taking your long here, okay, and you stay in it as long as you stay green and as long as your trend MQ trend dots stay bullish. If it changes back to red, you'd be exiting. So for example, with this trade here, you would have been going long on the close of this price bar right here at 88.5 or 1908.5, and you'd still be in the trade right now at 1933. Okay, so you catch a very big move because you never went back to red on the Trender Pro. So the momentum has either stayed in a bullish momentum trend or a neutral trend, and your MQ trend dots have stayed bullish the entire time. So your MQ trend dots have stayed keeping you in the uptrend. All right, and your initial stop is 10 ticks. So you'd be looking at about a 1905 or 1906 stop loss because you're in from 1908.5. All right, makes sense. 2.5 points stop. Oh, 13 tick stop. Thanks, Jay. 13 tick stop. Sorry, I just had it preset into my trade station when I place orders. And that's actually right. It's 13 ticks because when I preset it to 13 tick stop and 30 tick target typically. So it's a little over 2-to-1 reward risk. Now, the thing that makes this work, the thing that helps this is when we're in a volatile market, when markets have a lot of volatility, so they're moving quite a bit one direction or the other, these runs, when they happen, will get you a reward or a return on that trade from the $160 risk. You should get several times that on your profitable trade. So you should have a 3 or 4-to-1 reward risk ratio. Okay, for example, here you risk 2.5 points or 3 points, and you end up having 20 points in profit. Okay, the entry trigger is going to be as long as you have confirmation from the MQ trend dots, so green dots, as soon as you change to green on the price bar. Now, what you want to see right after entering the trade, you want to see follow through immediately. All right, if it does not follow through immediately, what you look at is the previous pivot low. Okay, the previous little low. So for example, let's go back and look at where it doesn't run right away. This is an example right here where it does not run right away. And let me do this. So right here, if you change to green. If you take the long on the open of the next bar right here, it should run immediately. If it doesn't and it pulls back like it does here, what you do is you look at the previous pivot low. Okay, as long as everything else is still lining up. MQ trend dots are still green. All right, so that means we're still lining up. You're going to look at the previous pivot low and you're going to put your stop below the previous pivot low. All right, and then every time you put in a new higher pivot low, you're going to put your stop below that pivot low. And then you put in a new higher pivot low, you're going to put your stop below that pivot low until it does run or until it stops you out. All right, because what we're trying to do when we're trading, we can manage a couple different things. We have the most control over a couple different things. The first thing we have the most control over is when we actually get into the trade, when we pull the trigger to get long or short. That's number one thing we have the most control over. Number two thing we have the most control over is how much we're going to risk, meaning when we're going to get out of that trade. We cannot say that the market has to move X distance. We cannot say that the market's going to, because it's not going to do what we want it to do. But what we can do is we can control how much we're willing to risk on the trade. And we can control when we're actually getting into the trade. All right. Now, a couple people are asking, what settings do you use for the trender, for the MQ trend and for the Trender Pro? You're using default settings on both. Okay. For both the trend dots and for the Trender Pro, changing the price bar colors. All right. Now, the other thing you can do to help increase your probabilities of success is you look at something like the MQ momentum, which is down at the bottom. Now, there's a lot of people asking, what about using MQ momentum? A lot of people that have been in the trading room going, well, why are you getting in when the momentum is bearish? You are 100% correct. You wait, and what you're going to do is you're going to look at, if you don't have MQ momentum, you're going to look at MACD, all right? And you're going to look at the indicator line, the fast line, which is this big white line on the MQ momentum. If this momentum is moving down and we're putting in lower highs and lower lows on the bounces, that means we're not going to take a long trade, okay? We want to have the momentum moving higher, meaning we want to have an upward momentum trend. When does that happen in this example here? Momentum trend does not shift to bullish until right here, all right? Why does it shift to bullish right here? Because at this point right here, we're now getting above the previous bounce here, and our lows are putting in higher lows. So we had a low here and then a higher low here, and now we're putting in a higher high here. And we're looking at this fast white line on the MQ momentum. All right, that's when our momentum shifts to bullish. So in that case, this gives us the okay to take the long here with our $160 risk. All right, same thing over here when we change to bullish. So that gives you the okay to take that long, and also gives you the okay to take this long. Does not give you the okay to take any of these longs down here. And you can look at the same thing with an MACD if you do not have MQ momentum. All right. And you can look for the exact same type of confirmation from the momentum indicator. Now somebody's saying, this morning you had a bearish directional bias on the indices and you had a bullish directional bias on bonds. You are 100% correct. We did, and we actually took a long trade in bonds that worked out really well for about $350, $400 contract to the upside on the breakthrough resistance. That worked out really well, and there's nothing wrong with that when you're day trading. Now, we changed our directional bias. Remember, we changed directional bias in the trading room because of the bull flag on the 30-minute price charts in the indices and the bull flag on the 30-minute crude oil. And we also changed directional bias in bonds because they were breaking through support. All right, so you have to pay attention to what the market's telling you. Now, again, what you're doing is you're waiting for everything to line up in your direction. Now, what's good about this strategy is if it doesn't run right away, we're getting out very quickly. So we're minimizing the losses that we're having because we're getting in, and then if it doesn't move our direction, we're gonna get right back out with a tight stop, which is $160. And if it does, and when it does move our direction, we're gonna be making several $100s per contract to the in our direction, which should pay for multiple losses and keep us in the money. Remember, trading as a whole is not about being right 100% of the time. Trading is about, when we are right, making more money on the winners than we lose on the losers. Okay, you can have a trade strategy that's correct 40% of the time, but that has a 3 or 4 to 1 reward risk ratio, and you have a very good trading strategy that's going to be long-term profitable. Okay. Yes, Mike, you're saying, are these identified in the trading room? Yes, these are absolutely identified in the trading room. All right. So everybody understanding the different parts. There's 3 parts to determining the trade. We're going to look at MQ trend dots. We're going to look at MQ momentum, or we're going to look at the MACD. Then we're going to look at the Trender Pro. If they all 3 line up, we have the trade. If they do not line up, we don't have the trade. Now, this strategy is great for volatile markets. It's great when the market is moving. We do not want to use this strategy on shorter time frame markets or on less volatile markets. All right. And the reason being, when the market is not moving, when there's no volatility, which there's been a lot of volatility here recently, so we're getting nice runs with the trender. When there's not a lot of volatility, what will happen is it'll look something like this. We're going to go bullish. You might make a couple $100 contract and then you'll exit, or bearish and you'll get back out with a loss. All right. It should be moving very quickly. Now, when the market is, when you get into a trade like this, for example, and it rips your direction right away. So for example, with this long right here, where this vertical bar is, if you got long on the change of the Trender Pro, so that means you were long from the open of this bar, the very next bar, you had your 13 tick stop, and it accelerates. You see how right after you got in, it just went boom, 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 straight up. And this will happen all the time, all right, especially if you combine it with the momentum. And it just jumps your direction, and you're in the money. When that happens, you should be in the money about $200 a contract. What you're going to do is you're going to trail your stop up to break even right away, all right, very quickly, because when it rips like that, it should not pull back down against you. And if it does, so for example, if you got long over here and it rips higher and it starts to pull back down against you, you're going to want to get out of it, all right? Because when that type of price action occurs, when the market rips your direction very quickly, it should continue to follow through. Now, you're also probably wondering, what are these gold price bars? Because you're seeing gold price bars pop up every once in a while. All right, these gold price bars are the trailing stop price bar. All right, if you're on a 2000 tick, if you're looking at the S&P, now this is on TradeStation, on TOS, they calculate ticks differently, so you can't go off the same tick number. For a 2000 tick in TOS, you'd probably be looking at a 1000 tick, or for a 2000 to try to match a 2000 tick in TradeStation. With this, when you have a 2000 tick, you're using the default setting with a 5 exit speed, okay? If you're on a 1000 tick chart, you're going to use a 7 or an 8 exit speed. What that does, what these gold bars mean, is if you get long and then you have a gold bar, it gives you the okay to trail your stop up behind it. This is for those of you that are less aggressive with your exit. So you know how I was talking about or less aggressive with your risk tolerance. Now, how I was saying before, you can stay in as long as your MQ trend stays your color and you don't change back to red. Well, if you don't want to be that aggressive and you don't want to stay in for these 7-point retracements, even though it stays in an uptrend, you trail your stop just below the low every time you get a gold price bar. So for example, you were taking along here, trailed your stop up behind this gold bar, and then trailed your stop up behind this gold bar, and you would have exited on this bar here. Okay, still not a bad trade and still very nice reward risk ratio. And then you would have been getting back in as soon as you change to green again, and then trailed behind this gold bar, trailed behind this gold bar, and then exiting right over here on this blue bar. Okay, so what the gold bar is doing is it's using what's called breakout logic to determine a retracement greater than what you typically want to see. So what breakout logic means is it's going to look at X number of bars back. In this case, the default setting is 5. So it's looking at the previous 5 bars and saying if it breaks the lowest point of the previous 5 bars, it's going to signal. Okay, so that means when it does that, it's going to trigger your trailed stop, and that'll help you. Yep, you just go 1 tick, anywhere from 1 to 3 ticks below the gold bar. I don't ever give a specific number. A lot of times in the trading room, people ask me, what's the specific number for the stop loss? Where does the stop loss go exactly? And I don't like to tell people an exact stop number. And the reason I don't tell the exact number is because there's several hundred people in the trading room. And if several hundred people are all in the same market, and let's just say they're all trading 1 lots, that's going to put a target on everybody's stop loss because everybody's going to go put their stop at that exact number. We're going to have several hundred contracts at the exact same number waiting to get stopped out. And it's just going to put a big old bullseye on everybody's order. So, and it even happens, for example, we just did it the other day in crude oil. And I typically never give people specific numbers for stops. And I did it in crude oil, and I shouldn't have. This was about 3 or 4 days ago. And the market went right down to that exact number, knocked everybody out, and then reversed, went right back up. So normally you're looking at 1 to 3 ticks below the trailing stop number. Okay, 1 to 3 ticks. That gives it, spaces it out a little bit. All right. When do you change your default exit to 7 is what somebody's asking. Now you can change your default exit to 7 if you want to be using the 1,000 tick. All right. Now when volatility is really high, there's typically a lot of volume, which means there's going to be a lot more price bars generated in a day for a tick chart. That's why I increase it to a 2,000 tick, especially with the kind of volatility and the volume we've been having recently. I'm going to be using a 2,000 tick chart because there's going to be a lot more price bars. When there's less volatility and there's less volume in the market, you can squeeze down and use a 1,000 tick. And the 1,000 tick will look, you trade it the exact same way, except instead of using the 5-bar exit speed, you're going to change it to a 7. All right. And that'll still do a pretty good job. You'll get in with your green change, and you'll get out when it changes back to blue, and you'll trail your stop behind each of the golds. Okay. So same thing here. Your trend dots were bullish. You would have gotten long, trailed stop here, and then you would have been exiting either right here or right over here. All right. But you use a 7-bar pattern when you're trading a 1,000 tick. Now you see the difference with a 1,000 tick because it's going off of, with the chandelier logic for the MQ trend dots, is going off of X number of standard deviations away from price action. Because that's happening, when you're using a 1,000 tick chart, your standard deviation is going to be closer. So this type of 7-point retracement that doesn't reverse the trend on the 2,000 tick is going to reverse the trend on the 1,000 tick, just like it did here. So just be aware of that. All right. So really, it's a very, very simple strategy. You're basically going off of color changes with momentum confirmation. All right. Green and green plus bullish momentum gives you the okay to take the long. Red and red plus bearish momentum gives you the okay to take the short. And we can go back and look at what it looks like when the market's moving down. So let's go back to the 2,000 tick. Bearish is going to be red and red. Okay. You have weakening momentum here. Okay, you see how our momentum, we went from a high up here, went down, then bounced back up. We had a significantly lower high here. All right, and we have red trend dots, and then our price bar changes to red. We sell in the open on the next bar with a 13 tick stop. You stay in it all the way down. Depending on your risk tolerance, you're either exiting on the break above the gold bar by 1 to 3 ticks, or you're exiting when it changes back to green. So you have a 13 tick stop. You're in it from 1911 3/4. Your exit would have either been at plus 10 points or at where was the entry at 11? At plus 20 points, basically plus 18 points. All right. If you're not using a tick chart, if you don't have access to a tick chart, what time frame on time charts do you use? You're going to want to use something like, at a minimum, a 1 minute chart. And the reason I don't personally like using time charts versus tick charts is because the reason I prefer to use tick charts over time charts is because a time chart will cause these retracements to, your price bars get much too large. Okay. For example, in this up move here, there might have been 5 or 6 tick bars generated, and there's only 2 time bars generated. So it's because the market moves too fast when you have high volatility. Okay. That's why I don't like using time charts, especially in high volatility time periods. Like when we look at, if you go look at something like crude oil, let's go look at crude really quick. This is crude today, and this is where we had our news announcement. Okay, this is where the petroleum stats report came out. It went up, chopped around, pulled back, chopped around, rallied back up. All right, and look at all the price bars that were generated. Now we go back to look at that exact same period of time. Oops, 10:30. On a time chart, you see what happens. This whole move here, up, consolidation, breakdown of consolidation, and sell-off happened in 2 price bars on a 1 minute price chart. You see that? Where all of this price action, where there's probably 30 price bars generated on a tick chart, there's only 2 1 minute price bars. That's why I prefer tick charts to time charts, because tick charts will show you more information. But if you have to use a time chart, I'd use something like a 1 minute chart. All right, and you can see, I mean, you still get pretty good rallies here. Look at your momentum. Momentum changes. It's bearish, bearish, bearish. So you're not taking any of these longs because we're putting in lower highs momentum. When does it change? Momentum changes back to bullish. When does that indicator line start putting in higher highs and higher lows? Right there. Well, when does it change to green? Right there. So this is where you have your green plus bullish momentum for your long, and then you catch the run up. All right. How are you getting your MQ trend on the chart? Mine's showing up on subgraph 2. When I change it to subgraph 1, it looks weird. Tim, you need to put it on the same axis as underlying data. Change it to the same axis as underlying data. And that should fix it for you. All right, now a couple people are asking, what's the white moving average on the chart, and do you look at it? Yes, white moving average on the chart is a 50 exponential moving average. And I use that just as a general support resistance area. So when the market gets really pulled away from that, you can watch for it to retrace back to it and then continue to climb. Retrace back to it, continue to climb. I have the original momentum trender, but not the MQ momentum. What settings for MACD to make it look close to MQ momentum? There's not really any settings to make it look close to MQ momentum. Just use default on your MACD, okay? You'll still get good setups. It's still gonna work just as well. All right. It's not going to be as obvious in my opinion. It doesn't look as obvious, but you can still have very good setups using the MACD with default settings. Alrighty, now let me go through, and answer everybody's questions, because there's a lot of people asking questions, and like I said, a big part tonight is just Q&A. So what's the settings for the MQ trend? Graham, the settings for the MQ trend are default, all right? 21, 21, and 4. What about a 2-minute, 10-minute, or 15-minute time chart? We're not using it on anything like a 10-minute or 15-minute, and even a 2-minute. The reason being is because this is designed for intraday, what we're using this for here is for intraday high volatility markets, like what we've been seeing in the indices here recently. That's why I keep talking about this strategy in the trading room, saying today is a good day to use the Trender Pro strategy. All right, it's when you have high volatility like this, where we're having big price swings, that's where we make the money. And there's a lot of money to be made as long as you are on the right side of the move. And what this is doing is it's basically making sure that if the market is moving and the market's going to have a big move, you're going to be on the right side of it. All right. 99% of the time, the indicators are going to all signal the right direction when it moves. I don't think I've ever seen it not signal the right direction, because the math wouldn't line up if it did that. Never, no, I don't use Norenco. Good deal, Tim. Are the dots necessary? Yes, the dots. See, what the dots are going to do is the dots will help keep you from getting chopped up in the trades. Okay, they're going to help filter out a lot of the bad trades. So they're going to keep you from going short in times like this. It's going to keep you from going short on this change here. All right, so what they're doing is they're another trend filter that will keep you, help filter out a lot of the noise that you'll see otherwise, and keep you from getting chopped up when you have false signals. Yeah, the indicators are on toss and infinity. Yes, it is recorded. The recording, again, the recording is going to be put up on youtube.com/value charts. So it'll be up there hopefully tonight sometime. By the way, there's a whole lot. I mean, we have like 1,000 people registered for tonight's webinar. So if your question's not getting answered, I'm not ignoring you. It's just literally hundreds of questions coming through. I'm just trying to answer as many as I can. Do you look for large correction in the MQ momentum with only small movement in price as a confirming factor? Do you look for a large correction in MQ momentum with only small movement in price as a confirming factor? You mean, for example, where this pulled back quite a bit here and the MQ and the price action just goes sideways? No, what I'm looking at is overall direction of the momentum indicator line. So is that indicator line putting in higher highs and higher lows, or is it moving lower highs and lower lows? For example, this does not really start putting in higher highs and higher lows until this point over here, and that's when we really want to be taking our long, because now our momentum is shifted back to climbing as opposed to retracing. And then you see you start going into consolidation again. Price action just moves sideways. We start breaking back out to the upside once again over here, which is where you would be wanting to get long again. That's funny, Elizabeth. You can get the MQ trend dots. Send an email to support@valuecharts.com for the MQ trend. If you want the MQ trend dots, support@valuecharts.com. The video said go to valuecharts.com/go for a free trial. It's not a free trial, it's a $7 trial. If you want to come into the trading room with me or go into the options and equities trading room with Dave, you can get it for an entire month. I mean, get the entire month for $7. The reason we charge $7 is because that way we can process your account. We get everything set up. It's just kind of maintenance fees, that type of thing. But yeah, valuecharts.com/go if you're not a member and you want to come see what it's all about. You can come into the trading rooms with us, see us trading these live. If you want to see the trades from earlier today, so the trades that we took, for example, in the trading room this morning, we had a gold trade first thing this morning. All right, we had a gold trade first thing this morning, and that was off of a 30 and a 60-minute bull flag and a 5-minute trend line break. Here's a 5-minute trend line break. All right, we took the long right here. If you go back and you look at your tick charts, that was right over here, okay? And MQ trend and momentum and everything agreed on the setup. We rode that out for about $300 a contract. Then we had, after that, we had a bond trade. These are all trades from today. We had a bond trade where we went long on the break above 168. We can go back and look at that here. Here's the 168 resistance we were looking at. We took the long right here on this gold bar, on the gold price bar right here. You see momentum changed back to bullish. We had green Trender Pro, green trend dots. Again, we wrote that one out for about $300 contract. And then we took longs in crude oil and RBOB on the break. Crude oil was the break above 31.23. Crude was the break above 31.23. And that was right here. And again, green trend dots, green trender pro, wrote that one out for a few $100 contract. Same thing happened in RBOB. And then we also had the long in the indices at the same time that crude oil was triggering. The Russell and the S&P and everything were triggering bull flags as well. The Russell's was the break above, trigger for that was the break above 1,008.5. And that was 1,008.5 is where that break was, and that was right here. We wrote that out for a couple $100 contract. All in all, not a bad. Today was a really, really good day, a really good trading day. So lots of good setups. And again, when we have these high volatility markets where the market's moving quite a bit, this is the types of opportunities these present. And the reason that this is good is because normally when we enter the trade, literally within about 2 or 3 minutes, we're in the money by $100, $200 contract, and we have break even stop, which means we now have risk-free trade. We then have the ability to put our stop to break even and sit back and let it run. If you don't have the MQ trend dots, give me 1 second. Let me ask for the link for the MQ trend dots. I said I didn't prepare anything for today. It was just kind of a Q&A and informal. So again, there's hundreds of questions coming through. So I apologize if I'm not answering your question. I'll get to it here in a minute. If you don't have the Trender Pro, if you want the Trender Pro, which is the thing that's changing colors, changing the price bar colors to green for bullish, red for bearish, blue for neutral, that you get that by going to valuecharts.com/MTP. Again, valuecharts.com/Momentum Trender Pro. That's what MTP stands for. The MQ Trend Dots, I'm asking for the link because I don't know it off the top of my head. If you want to try out the trading rooms, it's $7 for an entire month. You can come in, you get access to both trading rooms. You'll get access to all of our free video, or all of our videos, the premium members videos talking about end of day setups, swing trade setups, all that good stuff. I have the Smart Trader Pro. Can I use it on a daily chart? Yeah, you can use it on daily. But again, this is the strategy we're talking about here with trading the change of colors and using the trailing stops with the gold price bars. That's designed for intraday high volatility markets. Okay, so they're designed for high volatility markets. I'm a newbie, just going to master using the dome and trailing stops. Is your program appropriate for complete newbie? Yeah, it's appropriate, but I always tell people, don't just jump in. If you're new to trading, don't just jump in and start throwing money at the market thinking you're going to get rich. Take time to learn to trade simulated, learn to read the price chart, learn to read the setups, and then start trading live, because all you're going to do is just lose a bunch of money if you come in completely new and you don't know how markets move. You don't understand how to actually trade. Learn all that with fake money. When you can consistently make money trading simulated, then go live. Unless you have just a lot of money, you don't mind using it. You just consider it a sunk cost, which works for people to do that, and it's perfectly fine. How much is the MQ momentum? The MQ momentum, which is the indicator at the bottom, the link for that is, double check, valuecharts.com/mom. If you go to valuecharts.com/mom, that's the MQ momentum. It's 197. and these are all the member prices, by the way. We normally sell this stuff for more money for non-members, but I'm trying to, like I said, I just want to do something to help everybody out. So I'm just giving all the member links. Can you assess the volatility by looking at the average true range, or how would you approach this? That's a really good question, Richard. Yeah, you look at the ATR. You're going to look at the average true range on your dailies. So you can go back, in most platforms that you'll be on, most trading platforms are going to have an average true range indicator. Let me see. Average true range. All right. When your average true range, when you see very high ATR, that's when you really want to be trading it. All right. When you go back, if we go back and we look a few months ago, average true range right now is at 21. All right. Back here, the average true range, you're down at 10 or so. We don't want to be trading this strategy when we're down really, really low. For example, this is in the Russell. Let's look at the S&P. Again, when your average true range is very low, we don't want to be messing with it. When the average true range is growing or it's very high, for example, we have a 36.7, 36 and 3/4 point average true range right now. Back when it was at 17 points, the strategy is not the best strategy to use. When our average true range is really, really high, and you can see it stays very high for a number of weeks, for several weeks at a time, then the Trender Pro strategy is really good to use. But yeah, just look at your average true range. If your average true range is up above what it typically is, then you're good to go. If it's not, then you want to use different trading strategy, because the volatility is what's going to help us. And the reason volatility helps us is that's where we get these 5, 6, 7 to 1 reward risk ratios, where we'll make $700 or $800 on a trade that we risked $100 to $150 on. Are all these on toss? Yeah, all these indicators are on toss. What's this? What's the link for the $7 trial? If you want to come to trading rooms for the $7 trial, just go to valuecharts.com/go/GO. I really appreciate you doing this webinar. I've had the Trender Pro for a year and did not know how it could be used. I have made a lot of simulated money with it. Good deal. Glad to hear it, Marilyn. You're very welcome. ATR is similar to ADX. 9-gauge regression is trend stealth. Yeah. There are a lot of bull flags in Russell. Can you describe the action and momentum during that time? When you're looking at a bull or a bear flag, you want to have momentum agree on the direction. There were several bull flags in the Russell on a 30-minute chart today. Okay, you see our momentum is very, very strong. Our histograms are very, very strong. The bull flag is the up move followed by the lower high and the break of the previous bar's high, and a rally followed by lower high and the break of the previous bar's high, and then a rally. Lower high, break previous bar's high, and then a rally. When we're trading bull and bear flags, we don't take more than just the first 1 to 3, 1 or 2, and then at the very most 3 flags in a row, because the more you have in a row, the higher the probability of a false signal in the market not following through. But you got to have strong momentum agreeing on the direction. What are the best markets to use the Trender for, and what settings do you suggest for them? Default settings from all the markets. The best ones, S&P works really, really well, especially in high volatility times. Bonds actually work really well in high volatility times, and you're using bonds, a 500 tick chart. And you can see, I mean, you see the runs that you're getting with this, which is exactly what we're looking for, these very nice big swings where it's changing, the momentum staying bullish or staying bearish for a long period of time. And then crude oil is also a really good one to use with Trender Pro. And actually one that used to be my very favorite, was using RBOB and using a very short tick instead of using, because RBOB is a thinner traded market. Look at the correct contract month. Because it's a thinner traded market, you'll use something like a 100 tick chart. Okay, and these runs that you're getting here, these are really, really, this is big money. You're talking from 1.233 all the way up to 1.2672, and every single tick is $4.20. So you're talking 350 ticks basically, which is about $1,400 a contract. That move right there is. Okay. And this, by the way, this was the one that was happening at the same time that the Russell and crude oil were triggering. You had an inverted head and shoulders on your 100-tick chart. You had green plus green on the break of the resistance, plus very nice bullish momentum. And it just ripped right away. Looked really, really good. This webinar is really golden. Glad you like it, Richard. Yeah, this is, like I said, this is a lot less formal than we normally do webinars. Normally do use a PowerPoint and stuff, but it's just kind of giving back to you guys for being members. We appreciate it. What do you discuss in the trading room? Do you tell when to get in and out and why? Absolutely. I'll walk you through every trade that I place. I'll also talk about a lot of different trades that I won't place, that I don't place. So I'll be talking about, here's a setup here. If it goes above X number, then you have a long opportunity. The way the trading room works, okay, at least in the futures and forex trading room, which is the one I run, I talk about breakpoints. And I'll say, if the market goes above X, I'll give you a number, then it's a long. So when I give a number, though, we don't ever take the trade one tick above support or resistance or one tick above the break point or the trigger. All right, it's always 2 to 3. Once it triggers, if it's one I'm taking, 9 times out of 10, I want to tell you beforehand, this is what I'm looking at getting into. This is what I'm considering entering. And then I'll say, I just got long or I just got short as soon as my order gets filled. Okay. I'll say I just got a long S&P. And I'll say, okay, moving stop up to break even. Okay, trailing stop up till plus 100, locking in $100 contract. Okay, exiting, just got out at plus 250. Where I'll say, I don't like the way this is moving. It's taking too long to run. Be really careful. That means a lot of times tighten up your stops, get ready to close the trade because it should have been moving our direction already. And I'll tell you exactly when I'm doing that. At my average entry, it depends because I trade anywhere from, if I'm trading a small account, I might be trading one contract at a time, all the way up to 30 contracts. So average entry depends on the market, depends on how much slippage I get on the entry. What's RBJ? RBJ is RBOB. It's unleaded gasoline. It's the April 2016 contract of RBOB. Do you sell the MQ tick bar count indicator? No, we don't sell it, but I'll give it to you for free if you want it. The MQ tick bar count is this right here. It's counting the number of ticks on the price bar before that bar comes to a close. So for example, right now, this is 100 tick crude oil, and it's at 70 ticks. I only have it for TradeStation because it's just something I had created, had the developers code up for me because I wanted to know when my price bars were getting ready to close. If you're on TradeStation and you want the MQ tick bar count, send me an email. I'll send you a copy for free. I don't mind doing that. My email address is twood@microquant.com. You can use all the indicators on NinjaTrader, yeah, the Trender Pro, the MQ Trend, etc. But the tick bar count's not on. That's only on TradeStation. The trading room is open. The futures trading room is open from 8 a.m. Eastern until noon, until 12 o'clock Eastern. The options and equities trading room, which is run by Dave Aquino, is open from 9 a.m. Eastern until 1 p.m. Eastern. The reason that I have the trading room open during those times is because that's during the US and European session overlap. Okay, so there's a lot of volume in the markets. There's also a lot of the major announcements we get happen in those first few hours in the morning around 8:30 to 10:30 a.m. So there's a lot of really good trade setups that happen there, and normally we've made our money before noon. Steve, no, not right now. Not bringing any new clients. The trading room's open every single day, Monday through Friday, 8 a.m. until noon. Do I trade the Dow? Yeah, I don't trade the Dow as often. I prefer to trade the Russell. But yes, we watch the Dow. And I'll talk about setups in the Dow that are triggering. I'll give you the breakpoints for the Dow. Normally, what the best setups that we have, okay, a really good setup is going to occur when we have the S&P, the NASDAQ, and the Dow, and the Russell all setting up and triggering at the same time. And majority of the time, I'll tell you, the setup is occurring in S&P, NASDAQ, Dow, and Russell. The breakpoint for the S&P is X, breakpoint for the NASDAQ is Y, the breakpoint for the Dow is Z, and then you can look to get long or short above that breakpoint. If you, all right, they're not answering me, so I do not know the link for the MQ trend dots. I was trying to get it from Dave or Min, but neither one of them are answering their phone. So if you want the MQ trend dots, send an email to support@valuecharts.com. By the way, if you have support issues, don't email me. I mean, I'm happy to try to help you, but I don't know a lot about all the other platforms because I trade on TradeStation. And also, if you email me about anything, a lot of times it'll take me 2 or 3 days to get back to everybody, especially when I do a webinar like this and give everyone my email, because nobody else answers my emails. That's me answering them. And I trade for a living. Okay, so majority of the time I'm trading, not answering emails. So just so you know, it'll take me a little while to get back to you. Does the Trender Pro work with options? Yes, you can get directional. You can determine directional plays in options. Same way. You go look at something like, here's Apple. Instead of using a 2000 tick, you'd want to use something like a 250 tick. This is what it looks like on 250 tick in Apple. Man, that looks really, really good, actually. 250 tick might be too short. Maybe 500 tick. Yeah, 500 tick's better. So with the S&P, you recommend a 2000 tick with this technique. Yes, when volatility is high. So when we have very high volatility like we've been experiencing here recently, 2000 tick is good. If you have low volatility, then we're looking, instead of using a 2000 tick, using a 1000 tick. If you're late entering, i.e. now it's green, would you consider getting in? So let's go back and look at the S&P. One, I wouldn't be entering right now because I don't like trading during the night session. Two, yes, you can enter if you're late, but you want to enter, you want to time your entry. You don't want to just buy it because it's green, okay? You want to time your entry with something like a consolidation breakout. For example, you wait, you see it move sideways here for a few price bars. Right there, it kind of forms a small range. You trade the breakout of that range, and then you jump in long. And when you're entering late, whenever I enter late, I'm always moving my stops up to break even very, very quickly, because we run the risk, because we're getting a little bit late, of jumping in at the top, which is not something you want to do. Yes, Trender Pro works on NinjaTrader. What's the indicator that you're getting tonight? Not sure what you mean, Earl. We look for when adjusting the ticks for optimal trends. You want to have you want to look at what the price action has done, and when the market moves, how long does the trender stay in it, and was the trender changing in time? So for example, if you go look at Apple here, let's go look at the Russell here. If you look at the Russell here, this changed really, really late. I mean, it had already rallied from 993 all the way up to, it didn't change until 1007. So you're talking $1,300 or $1,400 a contract off of the low. By the way, I'm letting you know right now, I've gotten about 100 emails in the past 5 minutes asking for the tick bar count indicator. So you're going to have to be really patient with me. It might take me a couple of days to get it out to everybody. And if the email just says, here's the indicator, thanks, it's because I'm trying to get through all of them. I'm not trying to be rude or anything. But you see how long it took for it to change? That's too long. It took too long for this to change trend. So if we go look at something like a 500 tick, we then go, okay, this changed a lot sooner. We went back to neutral, just a few points off the low. We started getting bullish up around 999, and the low is at 993. Now we're only 6 points off the low instead of 13. So now it's looking a lot better, and it's staying in. It's staying bullish for the entire run up, and it stayed bearish for the entire run down, which is what we want to see. So you just kind of eyeball it and look at, is it catching the trend that you want it to catch? And by the way, this is just a textbook perfect example of, if you're in the trading room, you always hear me talking about higher high, higher low, lower high, lower low. This is just a beautiful chart we're reading the definition of a trend. Okay, here's our low, and then high, and then low, and then high, and then low, high. This is just textbook price action uptrend. All right, textbook perfect. Doesn't get any better than that. For toss, we should cut the tick count in half for most markets. Yeah, Robert, from what I've been told from traders in the trading room and stuff, it's best to use a smaller tick amount. I don't have a toss account. I don't trade on toss. Doesn't work as well, John. S&P is back up flirting with the resistance, so if it can get through the resistance, it'll be good to go higher. Russell is flirting with the resistance as well. You can see right here on the 240. Wouldn't be surprised to see him rally through the night session. And again, be patient with me. Literally, I've gotten about 100 emails. My phone is just sitting here buzzing. Can you tell us why you don't like trading after hours? Less volume, less volatility, get more slippage. Plus, I set myself to a schedule. And the reason I set myself to a schedule is if I don't, I will never have free time to do anything. Because if you have a personality like mine, you just kind of obsess over it. So if I allow myself to trade at night, then I'll be at my computer all night long every night. And my wife would probably leave me. I'm not just kidding. She'd just be upset with me. Would you show and explain an exit from a trend, not an exit caused by the golden bars? The exit from the trend would be when it changes color. So for example, if you had, it depends on your aggressiveness with your willingness to take losses. So if you're in a downtrend and you want to catch a bigger move, you stay in it until it changes to green. So for example, if you sold up here, you would have stayed in it all the way down until it changed back to green. That's one exit opportunity. Other exit opportunities, change it, sell it as soon as it changes back to blue. So as soon as the momentum trend stops, it goes into consolidation, then you get out. And the third option is the gold bars, trailing your stop behind the gold bars. Now, just so you guys know, I want to make sure there's no confusion. I'm not giving away the Trender Pro. I'm not giving away the MQ Trend Dots. I'm not giving away the MQ Momentum for free. The only free thing is the tick bar count, which is this thing right here, counting the number of ticks on the price bar. Okay, it's just that thing, counting the number of ticks on the price bar, so you know when that price bar is coming to a close. In your free videos, you talk about patterns, double tops, bottoms, etc. In your live trading room, do you point out these out as well as your education? Yes. Everything I talk about in the videos, majority of the time, the videos I make are about setups from the trading room. So the majority of the time, it's me explaining this was a setup we talked about in the trading room. And yeah, in the trading room, if you don't ever, one thing I encourage everybody to do when you first come into the trading room, if you're new to the room, the best thing to do is ask questions. All right, I answer hundreds of questions every day. All right, I try to make sure everybody's gets their questions answered. Now at the same time I'm trading, and at the same time I'm trying to identify new setups for everybody. And at the same time I'm watching 40 different markets, so you gotta be patient with me. But I do a pretty good job of making sure most questions are answered. And if I don't answer your question, again, I promise you I've never ignored anybody intentionally. It's just lots of questions are coming in, and it just gets pushed off the screen. And if you come into a trading room, you don't understand, why did you just get in that trade? Say, why did you just get in that trade? And I'll explain it. Well, we had a bull flag on X. We had a bull flag on 30s, 60s, and 120s. It triggered there, and then we broke the resistance on the 500 tick. So we entered on the 500 tick. Yeah, John, but typically it's going to be something. Honestly, I normally just stick with about a 500 tick or a 1,000 tick or 2,000 tick. I'm not going to go through and look at maybe a 426 tick chart just because that form curve fits it to look perfect with the back testing. Would you say on the indices, momentum has been getting less bullish after noon Eastern? No, on the indices, momentum stayed bullish all afternoon. Can you talk about how to figure out your daily bias when you look at higher time frames? It depends on how you trade. When I'm going through, I'm looking for my directional bias. First thing in the morning, if you come into the trading room right at 8 a.m., what I do is first thing we do is talk about crude oil and we talk about gold, because crude and gold a lot of times will set up and trigger right at 8 a.m. for a trade, or about 8:10, 8:05. All right. Then after that, we go through and we look at daily price charts. We look at our large time frames, dailies. Were there any candlestick reversal patterns? Were there any breakouts that are occurring? Is there any bull or bear flags? Are there any divergences? Anything like that happening? If there are, then what we do is we have our directional bias based on that. And then we go from the dailies and go look at our 240s, our 120s, our 30s, and our 60s. If I can't get in the trading room, how can I best use your other services? We have members videos that come out every single day with swing trading setups to talk about the price action of that day and the expected moves for the next day. So you can get directional bias from the members videos every day. When you enter a trade, do we tell us a target? Yes, I'll tell you targets. I'll also call them out as they're hit. John, I don't know the Mako strategy. I don't know what Dave is teaching in that. Is there a workshop that is similar to this webinar? No, Alfred, there's not a workshop similar to this webinar. This webinar was just kind of a Q&A and teach some people the Trender Pro strategy because everybody's been asking about it. I didn't want to have people pay to come learn it, rather just show it to you. After you adjusted the tick settings to match the volatility, what do you look at to adjust the exit speed for the MQ trend? You want to look at when the market's retracing, how far back is it retracing? You want to see your gold bars appearing at the bottom, like this, at the bottom of the retracements. What's the big white line on the lower indicator? The big white line is the fast line on the MQ momentum. By the way, this has been great. Thanks, Thomas. No problem, John. You're very welcome. Is that an inverted head and shoulders and a Russell 500 tick? Where? I don't see one. Not one that's really well defined. Why do you use and what is the purpose of the EMA? This is a 50 exponential moving average. A lot of times it acts as support and resistance, and you can also use it as a trend filter. If you're above the 50, you consider it a bullish trend. If you're below the 50, you consider a bearish trend. If you're on the 50, it's neutral. If you buy the Trender Pro, there's a workshop associated with it. That's right, Richard. Yeah. If you buy the Trender Pro, if you don't have it and you get it, you'll get a free workshop that comes with it. It's on demand, so you can just go watch the recording. Again, there are lots and lots of people asking about the tick bar count indicator, so bear with me. It'll probably take me through the end of the week to get everybody answered. All right, everyone. That is going to be about it for today. We're going a little over an hour. My wife is waiting for me to come eat dinner. So thanks for coming out. Again, if you want the Trender Pro, the Trender Pro is valuecharts.com/MTP. If you want the MQ Momentum, it's valuecharts.com/mom. If you want to try out the trading rooms, if you haven't done so, if you want to try out the membership, you haven't done so, $7. Just go to valuecharts.com/go. We'd love to have you come in. As I said, I would encourage you to come in and ask a lot of questions so you can learn. learn strategies. That's one of the best things about the trading room, I'm told, is that we teach you stuff throughout the trading day. If we bought the champion setup, which includes Trainer Pro, can we watch the training videos for the Trainer Pro? Yeah, John, send an email to support@valuecharts.com and ask Men for that. Ask them to enable that on your account. Yeah, you guys are all very, very welcome. Thank you all for being a part of the Value Charts family. Thanks for coming out tonight, taking time out of your night to spend with me. I appreciate it. Hopefully you learned something. Hopefully you benefited from being here. I will see you tomorrow morning in the trading room, hopefully. And we'll see what kind of trades we can get into. So that's it for tonight. I will see you all tomorrow. And until next time, happy trading.